Do you want to start with investing in crypto but confused with the terms and jargons being used by the other investors? We got you. In this video we will tackle crypto terms and jargons to help you understand the meaning of these. So stay tuned till the end. If you haven't subscribed to our channel yet, please click the subscribe button so you won't miss new crypto content. In contrast to conventional stocks and bonds, cryptocurrency symbolizes a whole other universe and is not only a unique financial alternative. Even for seasoned traditional investors, grasping the fundamentals takes time because of foreign nomenclature, cutting-edge technologies, and keeping up with memes and tweets. It's crucial to know exactly what you're investing in before you start, like with any investment. That is particularly true in the case of a volatile and still developing asset like cryptocurrency. Before you invest in cryptocurrencies, there are a few things you should do, such as building up your emergency fund, paying off high-interest debt, and setting up a regular retirement plan. As we've previously stated, you should never invest more money in cryptocurrencies than you can afford to lose, and experts advise allocating no more than 5% of your portfolio to these digital assets. A beginner's grasp of what you're getting into, how cryptocurrencies vary from conventional investing techniques, and the various variables that might influence a cryptocurrency's market value should all be included to your checklist. Here are a few terminologies and expressions that may aid newcomers in understanding the world of cryptocurrency investment. Altcoin. Any cryptocurrency that isn't Bitcoin is an altcoin. The second most popular cryptocurrency, Ethereum, as well as any of the thousands of coins with extremely low market values can be considered altcoins. As an investor, experts advise you to mostly stay with the larger, more popular cryptocurrencies. Bitcoin. On January 3, 2009, the first and most valuable cryptocurrency was introduced. Since then, its value has increased gradually, although it has also seen extreme volatility. The cost of Bitcoin has changed considerably recently, going from a record high of $60,000 down around $30,000. Bitcoin Cash. A peer-to-peer electronic cash system that formed from a fork of the original Bitcoin. Where Bitcoin is widely accepted as too volatile to be useful as a currency, Bitcoin Cash is designed to be better optimized for transactions. Block. Datasets included in a blockchain. Blocks on blockchains for cryptocurrencies are composed of transaction data from users buying and selling of coins. There is a maximum amount of data that each block can store. A new block is created to continue the chain whenever it reaches that limit. Blockchain. A blockchain's data groups. As users buy or trade coins, transaction data are compiled into blocks on cryptocurrency blockchains. Only a specific quantity of data may fit in each block. The chain is continued by forming a new block whenever it reaches that limit. Coin. A fictitious digital asset store that resides on a certain blockchain or cryptocurrency network. Some blockchains, like Bitcoin, use the same name for both the network and the currency. Others may use distinct names for each, such as the Stellar blockchain's Lumen native coin. Coinbase. A well-known controlled exchange for cryptocurrencies. As the first cryptocurrency exchange to list on the Nasdaq, Coinbase has made history. Cold wallet, cold storage. A safe way to keep your Bitcoin entirely offline. Many cold wallets, also known as hardware wallets, are actual objects that resemble USB drives. This type of wallet can aid in preventing your cryptocurrency from theft and hacking, but it also has certain hazards, such as the possibility of losing it along with your cryptocurrency. Cryptocurrency. A decentralized, digital kind of money. A long-term store of wealth or for buying and selling items are two uses for cryptocurrencies. Decentralization. The principle of distributing power away from a central point. Blockchains are traditionally decentralized because they require majority approval from all users to operate and make changes, rather than a central authority. Decentralized finance, DeFi. Financial transactions made without the assistance of a middleman, such as a bank, the government, or another financial organization. Decentralized applications, dApps. Applications created by developers and installed on a blockchain are used to execute operations without the use of middlemen. Decentralized finance operations are commonly accomplished utilizing decentralized applications. The primary network facilitating decentralized financial activity is Ethereum. Digital gold. Due to the manner that certain cryptocurrencies may preserve value and appreciate in value, experts have compared them to actual gold on occasion. Bitcoin is often called digital gold. Ethereum. Ethereum is a software platform and the second largest cryptocurrency by transaction volume. Its associated currency is called Ether, and it is used by developers to build new apps. Exchange. A cryptocurrency exchange is a digital marketplace where you can buy and sell cryptocurrency. Fork. When the users of a blockchain alter its guidelines. A new blockchain that breaks away from the original blockchain and one that adheres to the old rules are frequently the outcomes of these modifications to a blockchain's protocol. For instance, a fork in Bitcoin created Bitcoin Cash. Gas. A cost associated with using the Ethereum network that developers must pay. Ethereum's native coin, Ether, is used to pay for gas. Genesis block. The first block of a cryptocurrency ever mined. HODL. Although the phrase was coined in 2013 as a user's misspelling on a Bitcoin forum, it actually stands for "hold on for dear life." It refers to a passive investing strategy in which investors purchase Bitcoin and hang on to it rather than trading it in the hopes that its value would rise. Halving. A provision built into the Bitcoin code that reduces the supply of fresh Bitcoin entering circulation by half after a specific number of blocks have been mined, generally every 4 years. The price of Bitcoin may be impacted by the halving. Hash. A special combination of numbers and characters used to identify blocks and connect buyers and sellers of cryptocurrencies. Hot wallet. A Bitcoin wallet made of software that is online. These wallets are somewhat more vulnerable to hacking and cybersecurity assaults than offline wallets, although being more practical for rapid access to your cryptocurrency. This is similar to how files you save on the cloud may be more readily accessed than those secured in a safe in your house. Initial coin offering ECO. A means of raising money for a brand new cryptocurrency startup. ICOs are comparable to stock initial public offerings (IPOs). Market capitalization. Market capitalization for cryptocurrencies is the sum of all the coins that have ever been created. By dividing the current number of coins by the current value of the coins, you can determine a cryptocurrency's market cap. Mining. The method through which fresh cryptocurrency coins are made accessible and a record of user transactions is kept. Node. A computer that connects to a blockchain network. Non-fungible tokens (NFTs). Non-fungible tokens are monetary units intended to signify ownership of certain digital goods like works of art or collectibles. The Ethereum blockchain is where NFTs are most frequently kept. Peer-to-peer. Two users interacting directly without a third party or intermediary. Public key. Your wallet's address, which is similar to your bank account number. You can share your public wallet key with people or institutions so they can send you money or take money from your account when you authorize it. Private key. The encrypted code that allows direct access to your cryptocurrency. Like your bank account password, you should never share your private key. Satoshi Nakamoto. The pseudonymous creator of Bitcoin. No one knows the true identity of Nakamoto or if it's more than one person. Smart contract. An algorithmic software that automatically implements a contract's provisions depending on its code. Smart contract execution is one of the Ethereum network's key value propositions. Stablecoin or digital fiat. A stablecoin ties its value to a physical good or non-digital cash. On the blockchain, a digital fiat stands in for a fiat, or money backed by the government. Tether, for instance, which is linked to the dollar. Token. A cryptocurrency that typically offers more value than merely the ability to transfer money, like a coin. Vitalik Buterin. Programmer who invented Ethereum in 2015. Wallet. A place to store your cryptocurrency holdings. Many exchanges offer digital wallets. Wallets may be hot, online, software-based, or cold, offline, usually on a device. What have you learned from this video? Were you able to remember all the terms? It's okay if not, you can replay this video on and on until you understand the terms. For the meantime, let us know your thoughts in the comment. If you think this video have added value to your knowledge, please leave a like and subscribe to our channel for more. Thank you.